Are you tired of watching your stocks lag behind the market, even on days when the indexes are soaring? Do you find yourself wondering how to identify the true leaders in any market condition? Well, get ready to unlock the secrets of relative strength, the powerful concept that separates the winners from the losers in the world of trading. In this video, we'll walk you through 4 proven methods to identify stocks with superior relative strength, giving you the tools to supercharge your trading and leave the competition in the dust. Plus, stick around to the end where we'll share a bonus tip on how to combine these techniques for even more explosive results. I'm Rick Pedicelli, head stock analyst at Morpheus Trading, and I've been mastering the art of trading for over 20 years. If you're ready to take your trading to the next level with the power of relative strength, hit that like button and subscribe to our channel for more cutting-edge insights like this. Let's dive in and discover the 4 powerful ways to identify relative strength in your trading. So first up is pattern relative strength, where we compare a stock to an index. It's a pretty simple concept. We're looking for the stock to be setting higher lows while the index is setting lower lows, or at the very least holding its ground like CAVA is here. We have the S&P down here setting lower lows, and we have CAVA from this area here basically sideways. There's a little bit of an undercut there, but that's pretty darn good when the market's falling apart and CAVA is pretty much sideways. Another example of this would be OSCR. It sold off ahead, so it had relative weakness here in that it sold off prior to the S&P topping out. But then as the S&P rolled over, OSCR held its ground and set higher lows through this whole rollover in the S&P. Also, another way that we use pattern relative strength would be if the stock reclaims the 50-day MA or 200-day moving average ahead of the index. So if the index is below the 200 and the stock is above the 200, that's relative strength. In this example, OSCR reclaims the 50-day moving average on April 16th, and that's basically when the S&P is breaking down below the 50, this red line. So that's a sign of relative strength. Another sign of relative strength would be for the pattern to break out, as OSCR did in around May 7th, while the S&P was just reclaiming its 50-day MA. So within pattern relative strength, we have a few ways to identify it. We have a stock could be setting higher lows while the index is setting lower lows. A stock could break out to new highs ahead of an index, and the stock can reclaim a moving average ahead of the index. All right, so that was pattern relative strength. Next up is the RS line, which is more or less a visual representation of what we're seeing on the chart. So the relative strength line, so back to the chart of CAVA, and now we have the relative strength line, which is simply the price of CAVA divided by the price of the S&P on a closing basis and plotted here. Now, most charting software has the ability to plot RS line. I know you can do it in Thinkorswim, TradingView, Market Surge, has it. TC2000 can do it. So it's pretty much built in for most trading software packages. You don't have to do any coding. And so when the RS line is moving in sync with the price action, it's moving in lockstep. That just means that the price is performing as good as the index. When the RS line is outperforming the price, setting new highs or setting higher lows ahead of the price, that means the price of the stock is outperforming the index. And when the RS line is setting lower lows while the stock is setting higher lows, that indicates that the stock is lagging the index. The RS line is going lower even though the price is going higher. For CAVA, we have the price action setting a lower low here and the RS line setting a higher low, which means that it's showing relative strength to the S&P 500. And we also have an RS line breakout on this day right here, which is slightly ahead of the price breakout, which is a bullish sign. So CAVA took off ahead of the index, showing relative strength. It's confirmed by the strength in the RS line. Another example of the RS line giving a clear picture of the relative strength is app held up extremely well during the market correction and basically just undercut this prior low while the S&P sold off. So you can compare app to the prices of the S&P 500 down here, or you can look at the RS line and see that the price action made a lower low right here, but the RS line made a higher low. So it's subtle, but you're seeing higher lows out of the RS line, indicating relative strength. PSTG is another example of subtle relative strength. We have the price slightly undercutting the prior low, and it's nowhere near the low here on the RS line. And we even have the price here taking out this low, and the RS line does not really take out that low right here. So subtle things right there, subtle signs of relative strength, and the RS line just makes it easy to see. So that's the RS line. So next up is the relative strength ranking, which is just a way to rank all stocks by a formula. The formula can be over whatever time frame you want. It can be over 65 days, a half a year, or a full year. We use all three of those when we scan in TC2000. But if we had to choose only one, it would be over 252 days. And the RS ranking is something that was made popular by IBD. In their system, it's from 1 to 99, with 99 being the best, 1 being the worst. And a 99 rating simply means that the stock is outperforming 99% of all other stocks in the market. We use the rating in TC2000, and it's pretty similar to IBD, not exactly the same thing, but close enough. TradingView has its own version here, the RS rating, and it posts the rating right next to the RS line. So PSTG is a 98. So it's that simple. We bring up a chart and it spits out the rating for us, 98 in CAVA, and anything above 95 as we're emerging from a market that's been in a corrective phase is an extremely powerful RS ranking. Anything greater than 90 is really good. And I think minimum, what we'll look for is an 85. We can go down to an 80, but we're really looking for anything above 90, 95 plus being really good. And for example, a bad ranking would be Tesla, which has been in a downtrend since last July. And we have a 23 RS ranking. So not something we'd want to look to buy. Another example of relative strength would be SG. With its gap up on earnings, it's a 99 RS ranking. It's as good as it gets. So this is just another way to identify relative strength, and a pretty simple one at that. And I just wanted to be clear that this RS rating has nothing to do with the RS line here. It's just simply putting the rating right next to this RS line. And our final method for relative strength is the percent move off the low. That's what we call it. And it's another very simple way to identify what's moving out the best during a new rally attempt. So we go back to CAVA, and we generally do this during the first few weeks of a rally. So what we do is we measure the move up in the S&P, 3.5% move, say 4% move tops there. And we'd compare that move with all other stocks in the market or on our watch list. And during that same time, CAVA ran up 20%. So generally speaking, we're looking for stocks that are at least going to double the performance of the S&P as it pushes higher. So if the S&P is up 4%, we want to be looking at stocks up 8% or more. Often we'll find that some of the best candidates are up 3 times as much as the S&P. And so we do this scanning in TC2000. It allows us to easily set up the scan and run through a bunch of stocks real quick. Another example with PSTG, say we're looking at PSTG from this tight action right here. How is it performing at that time before it took off? It's up about 14% off the lows. The S&P is up about 5%. So almost 3 times better than the S&P. So that's showing leadership right there, a ton of relative strength. And so the last example here of the percent move off the lows would be OSCR. And we have the S&P, again, with a 4% move off the lows. If we look at OSCR from the low, it would be probably around 30%. If we were to go just from where the S&P made a low here to its recent high, that's 20%. So 4 to 5 times better than the market. So clear relative strength there. While there are 4 ways to identify relative strength, it's really a good sign when there's 2, 3, or maybe all 4 of those things present. Like in CAVA, if we're looking at CAVA right here at $74, if the market's moving higher, we have a 98 RS. We have the RS line beating the price action to a new high. We have higher lows, or basically the price action going sideways while the S&P rolled over. We have the price action holding above the 50 MA for the most part, while we know that the S&P broke down below the 50 MA in April. So just a bunch of good quality relative strength signals there over a short period of time, and something to give a trader a bit more confidence with knowing that you might be on the right path here to finding a new leader. There you have it, all 4 of our relative strength techniques that we use to find leadership. But just don't take our word for it. Put these methods to test in your own trading and see the difference they can make. If you want to dive even deeper into the world of relative strength and other advanced trading concepts, we invite you to join the Morpheus Trading Academy as a VIP founding member. As a VIP member, you'll gain access to our cutting-edge training materials, live trading sessions, and a community of like-minded traders all working together to achieve their financial goals. To learn more and secure your spot, just click the link in the description below. And before you go, be sure to check out the 2 other videos we've handpicked for you. These videos will help take your understanding of our proven swing trading strategies to the next level. Remember, the key to success in trading is to never stop learning and growing. So keep exploring, keep pushing yourself, and most importantly, trade with confidence. We'll see you in the next video.